Hi, good evening, everyone, and welcome to another Twitter Spaces with me. My name is Kalu Aja, and we call this the Money Spaces with Kalu Aja. Welcome again. Today we are talking about investing. So all through January and just the first week in February, we'll be talking about investing in Nigeria. Where are the opportunities? Where are the risks? Where are the rewards? What should we look out for? And it's important because 2023 has got a lot of, should we say, obstacles, milestones, and stumbling blocks, and even opportunities ahead of us. Number one, we have the big election coming up. And that means that there's going to be a change in perhaps the economic policy of Nigeria going forward. So it's very important to understand that and how that plays into our investment decisions. Then again, there's the current macroeconomic environment we have in Nigeria. We have the high inflation, we have the fall in rates, and we have maybe the opportunities in maybe venture capital and all that. Hence, it's important to bring in the experts and ask them questions so that way we can all learn together. So today I have a guest with me today, Mr. Ayodeji. I'm going to let him introduce himself. He's right here. Go ahead, sir. You can unmute. Just tell us about yourself, who you are, and then we can get started. Mr. Ayodeji, you've got the floor, sir.
Okay. Good evening, Mr. Kalu, for this opportunity again to be here. And good evening, everyone. My name is Ayodeji Ebo. I'm an investment analyst and I'll say also an investment banker. So I love to talk about investment and enlighten people about investment. So it's a great opportunity to be here.
Thank you so much. So that's a very, very humble presentation, but I'll take it, sir. Thank you so much for agreeing to be here to talk. Let's get right into it. We're going to have this space for only an hour. So let's just try to get as much from you, sir, as possible. So, sir, let me lay this question like this. I follow you on Twitter, and if you're not, you should be showing Mr. Ayodeji as well. I follow you, and you post a lot of the fixed income, the auction based on the federal government bonds and all that. The last one you posted, or the current one you've posted, we saw that the Central Bank of Nigeria has increased their interest rates, the MPR. So those rates have gone up. The risk rate in Nigeria has gone up to about 17, I believe. But we then saw that the returns, the risk-free returns to Nigerian investors has fallen to 4%. What's really going on? That's the first question. And if you could dovetail to the second question, how should I, as an investor, play in that fixed income market, that short-term market in Nigeria, the 91 day to 1 year? How should I play? So what's going on and what's the play in that short-term fixed income market in Nigeria?
Okay, thanks. And very insightful questions. And I know for everyone would have been wondering, why will I bid for a 91 day at 0.29% for treasury bills, and for 1 year 2 day at 1.80%, and for 1 year at 4.78% when inflation rate is at 21.34%.
Yeah.
So sometimes in the fixed income market, there are a lot of factors that also drive rates. So beyond the fundamentals of um, looking at yield, looking at inflation, when liquidity is also very high, we're all also very aware of the continuous CRR debit, say discretionary debit of this for the banks. And sometimes rather than just allow CBN debit you, when you are debited, you're expected to keep about 32.5%. And when you check for the CRR for some of the banks, the effective cash reserve ratio for some of them is above 60-70%. And that was what led to the introduction of special bills, which is used to replace whatever CBN takes from your bank. And they see that your liquidity ratio is low. You are giving special treasury bills at 0.5%. So for banks, sometimes when they have a lot of liquidity, they may just prefer, rather than CBN taking it out of their hand and they have to get at 0.5%, they go all in. Secondly, there are also fund managers that, based on the trust deed is like investment policy statement, what guides the investment. So if you have set up a fund and you have said minimum you would have in treasury bills is 30%. If your fund is growing, that means no matter the rate, despite the low rate, because your trust deed or investment policy statement has stated that in government bills, minimum you would have is 30%.
Mm.
You will be forced to also bid at, because you don't want to also go against the rules and you may be sanctioned. So these are some factors that may make people look at, why will I bid at this rate? It's not necessarily, I'll be surprised if we see like ordinary local investors or individual investors trying to bid at these ridiculous rates. When you compare it to the banks, the PFAs, that some of them have limited options, or fund managers that have limited options. Then let's also not forget that even the government parastatals, sometimes when they also have they have excess cash on, they would also mind. We call it the non-competitive bid, that they just bid at any rate. So these are several factors, and if we also have people that um, have information, would also be good to share. But these are the things that I've looked at that may be responsible for these low rates, not necessarily because uh, people are very desperate. So you would see that the bond auction that came out after that, you would see that government was a bit aggressive for the
Mm.
bond auction, and there was I would say there was over subscription for that bond auction. And the rates, yes, where there were new issuances, you would also see that the rates, closing rates, are also increased, which shows that government is still very aggressive. Because if you also trace it back to the budget, based on projections, about 11 trillion projected, which we know it will be higher than that.
Mm.
So we would definitely see that they would also come to raise money, and the outlook is that interest rates would be up,
Mm.
uh, So that's basically just trying to break it down, why you would see that interest rates are dropping, not necessarily based on fundamentals,
Yeah.
but based on the peculiarity of those that participants in this auction. So now going to my second auction, second question, which you say, how will that for retail investors? So I
Yeah.
would say for retail investors, you don't have any business in these treasury bills, because even for when you look at the percentage for even a savings account, which is 30% of MPR, that will be around 4.42%. So if you don't even take any risk, if you don't have any business in this treasury bills market for now, because if you keep your money in your bank account, you earn 4.4%, and there are also high yielding savings or investment accounts that may give
Mm.
you up to 10%.
Could you? Do
So
you want to name them? Is this something you can do, or?
yes, I can. If you permit, like there's a new financial tech that we just opened. That's Optimus by AfroInvest.
Mm-hmm.
That gives you the opportunity to have your savings and earn 10%, and you can earn up to 13% even on that platform. It's called Optimus by AfroInvest. So what we've basically done is that for 28 years we've been managing investment, and we feel let's make it available to everyone. No
Mm.
minimum. So you can save, you can create a savings plan, 1,000 every month, 1,000 every day. People are doing that, and you build
Mm.
it up. And you can also save in dollars, which I know we'll definitely talk about, where you put in naira. You don't need to look for a malam, and you can change it to dollars. So that's one angle to answer that. So I would summarize that with, you don't have any business trying to bid at this market, because you also look at the placement rate, which is bank deposit. We're all used to bank deposits. The rate at which banks give you for a 90-day, you should still be able to get between 10 and at least 11%. So you don't have to come and bid at 1% in the treasury bills market, because you are talking about, because you feel is yes, it's risk free in quotes, but we also know that CBN will also not allow any bank to go under. If CBN
Yeah.
can support the government to this extent, ways and means is almost at 23 trillion. Then the banks, we've also seen how they've also supported the banks and restructure it. So there's really no fear of saying, especially banks that we know, we see their published accounts. I'll put a caveat. You can see their published account, audited account. Yes, so you really don't have anything to fear if they are giving you 10%. So that, because it's important that you are not worse off when you have inflation at 21.3%.
Mm.
You can't be bidding for treasury bills at
At all.
1%.
Yeah.
You're actually bleeding indirectly. You're
Yeah.
not investing.
It's not a real return.
So
So I just to summarize for those that are following, right? So you've explained that the reason why banks are buying treasury bills at 4%, which is lower, right, than the MPR and inflation, is because the banks don't want to be debited to buy even a lower investment. So they sort of take that option of getting the lower 4% because it's better than the CBN keeping their money, more or less. Just to put it in simple words.
yes,
Yeah.
correct.
And then you've
Yes.
also said that in is that as a retail investor, that like Nigerian, it doesn't make any sense for me to bid and buy quote unquote risk-free federal government bonds or treasury bills for now, because there are options in the private space that I'm able to get between 10 to 13% if I invest in a fixed income product. You've mentioned After Invest, the Optimus, where as a retail investor, I can put money, you said daily. Is there a minimum to this?
There's no minimum. For
No.
to create a plan, you need just like 1,000 naira. So I won't call that a minimum.
Okay.
And you can continue to save. For the dollar plan is about $10.
I want to
So
come to
you
dollars. I want
just
to come to dollars specifically. But for naira, with a 1,000 naira, I can get as much as 8 to 13% more or less.
yeah,
Nigerian
between 10 and 13%. You
10
will
and
be able
10
to access that. And you can get your money anytime. It's
anytime.
like
Because,
high yield investment account
gotcha,
where rather than leaving your money in your savings account, whenever you need it in that account, you just withdraw to the registered bank account in your name.
gotcha. So that's very, very good help for us there, right? Okay, so we're talking now. So is there any difference if I want, because this Optimus is more or less short-term money market. If I were to invest for 2, 3 years, will there be a different recommendation in terms of bonds, or how will that play out?
Okay.
Would you still
Okay.
like, this is naira now, we're still on naira. Would
Okay.
you still favor naira long-term dated bonds, federal government bonds? They are paying almost 13 to 15 or so. Do you still favor those?
Okay, thanks. And what I'll say, looking at the long-term instruments, so there's the one that is available to everyone, which would say that's the FDN savings bond, and uh, it's the minimum is 5,000 naira, so you have no, it's accessible to everyone,
Mm,
and it's issued every month. We expect the one for this month to open tomorrow again,
mm,
and we'll be looking at the rates. But it's also good to be mindful because it's when you look at the duration, is 2 to 3 years. So the last one for January, for the 2 year was 9.6%, and for the 3 year was 10.6%.
mm,
So what I would advise is there are also people that there are also periods that you see that the rates were high. Before this, it was between 12 and 13% for December. So
mm,
what I would advise for investors is that wait for periods that you feel the interest rates is um, is attractive, because you
mm.
are locking in your money for 2 and 3 years.
Yeah,
While it helps you to save, but once it's getting to single digits, I would advise that you should be a bit careful and wait for period when people would be when the rates would be very attractive,
yeah.
and you'll be able to lock in again for another 2 or 3 years. So that's what I would recommend. Tomorrow, I feel that the rates will drop given what we've seen in the treasury bills market,
Mm,
and I won't advise anyone to lock in at very single digit rate, because when you see the rate go back to about 12 or 13%, there's nothing you can do. You are already locked in.
oh,
So it's one thing. That's why you may look for either having the money in your high yield savings account,
mm,
and you wait for an opportunity. So for those that are also able to afford the FGM bonds, which for standard size 50 million in the primary market. So
wow,
when you look at the last auction, for those that can go very long, the auction looking at the auction result, it was really very very attractive. So you would see that even for the 20, so when you look at the 2028 closed at 14%, the 2032 closed at 14.9,
Mm-hmm.
2037 closed at 15.8,
Mm-hmm.
and the 2049 closed at 15.9. These are very good rates to lock in instruments, even if rates want to move up, maybe at maximum 16.5%. It will
Mm.
also moderate because government will also be careful not to borrow too high.
Right.
So yeah, but you know that it's, if you are not buying the standard size, exiting is always a challenge. If you buy the standard size of 100 million, you can easily sell.
Mm.
But if you are not buying that standard size of 50, 100 million, it may be very difficult. And that's why you would have to know what kind of funds do you have, when do you need it, and what are you putting it into. Is there liquidity? Will there be liquidity when you need to exit this market? So that's what I would say regarding the Naira bond. Then maybe to add, there's commercial paper, which
I, I,
also has.
let's. But I'm going to take you on commercial paper very soon. Let's just review what you said about the long-term dated fixed
Okay.
income securities. So I
Okay.
heard you say, number one, we should be careful of the lot sizes, which means that if I'm buying and I want to buy maybe 1 million naira bonds or 10 million naira bonds, it's not a real lot size, right? So it's difficult for
Yes.
me to put it on. So the lot size you've mentioned are 50 to 100 million. I'm not sure many people can do that, but it's important information to know that the lot sizes are very, very important. You've also said don't lock yourself into the long term. We have an election coming up. We don't know what's going to happen after February or after June. So you are saying essentially try to play the short market, even if for now, just to see what's happening. Because again, you said the rates are shorter, i.e., the rates are still below double digit. So if it's below double digits, we should not lock it in yet. If it's above double digits, possibly. But so it's don't lock it at short at double digits rates for long term. Play the short term market for now and watch the lot sizes if you are doing those long term investments. Did I get that all in?
Yes. Yes. Well summarized. Thanks.
Great. So let's now go to the commercial papers. And I think commercial papers are what you mentioned about at the federal government borrowing. So now you want to talk about commercial papers, which are going to be the private corporates borrowing. So yeah, go ahead, please. What are the opportunities there? I see some. I've seen Dangote. I've seen a few guys come to the market to do corporate commercial papers. What am I looking for? Am I looking for yield, issuer, long dated, short dated? What am I looking for?
Okay. Thanks. And just for the basis, because like I know people that follow us also would like us to for us to be able to provide some bit of understanding. So commercial paper is also similar to treasury bills in way it works, but you are lending, like for treasury bills, lending to the government, but for CPs you are lending to corporates. So what you also watch out for is the rating of who is issuing the commercial paper is very important. When you are trying to invest in commercial paper, you don't just invest in any commercial paper because you just heard that the rate the rate is very attractive. You need
Mm.
to be mindful of the rating. It's very important
The
looking at the
rating,
rating.
the issuer, the rating of the
Or
issuer.
rating for the issuer. The
Okay.
issuer and the issue. If you see, you need to look
Both.
at those ratings. Yeah, you need to look at it, and that should inform you. So getting, when you see instruments or commercial papers that are very attractive, just find out. It's good to understand the business that they are doing, because you are borrowing to them. So beyond when it may look like, yes, they may not default, but if you understand the business, it also gives you comfort. If MTN is coming, for instance, seeing their results as a public company, their rates may not be very attractive, but you know it's almost as risk-free as the government because of their cash flow. Yeah, but you will see some banks to have issued would have higher interest rate compared to likes of MTN and Dangote at sometimes. But there are also some that have very low credit rating and high interest rates. You don't, because you diversify. So if I see that one is giving me 18% and I'm not too sure, so let's assume I have a portfolio, I'm allocating 10 million to CP.
Mm.
Minimum for investment is CP is 5 million. So
Yeah.
I may decide that, okay, I'm just putting 5 million in this one because it's high. I don't want to get too exposed. And the
Mm.
one that is giving me 11, 12%, I'll put another 5 million. So we shouldn't get greedy and put all the money in the one that is giving you high. We've not seen any CP, known CP, that have defaulted,
Mm,
but we all know that the environment where we operate, there's also, it comes with a lot of risk. So one has to also be very mindful of
mm,
that. So CPs are shorted. The longest tenor is 270 days. Between 91 days and 270 days. Like treasury bills is between 90 days and 364 days. So
mm,
they come with higher premium relative to treasury bills,
mm.
and can also help you get higher return for investments.
Excellent, sir. So again, just to summarize again, so for CPs, which are like the borrowings by the private sector directly to the investors, not sort of bypassing the banks. You said watch the rating, right? Watch the rating. Is there a minimum rating you want to quote, or just watch the rating? Is that going to be sufficient for us?
I think it's to just watch that
Watch
rating
the
and
rating. Okay,
compare.
so make sure
On
it's
their
rated.
own, they may not make sense, but when you compare similar companies, you'll be able to see the one with lower rating. And you also check rating. They also have investment grade. When you check the rating, we have three major rating agencies in Nigeria:
Mm-hmm,
GCR, you
mm-hmm.
have Agosto, and you have Data Pro.
There's
So,
fans. I don't know if fans is still there. There's fans, and sometimes yeah, but GCR
but
and
majorly you will see between Data Pro. So when you look at them, the Agosto, um,
I think Augusto and
GCR,
GCR are just Augusto GCR to me. That's fine. If they are more,
yes.
and how do you get the rating, guys? If you want to see the ratings, you look at the prospectus. They always attach a prospectus, or on the
The
advertisement,
time sheet, the
on the
allocation sheet, they
you will
also put
see
it there.
written there. They have to give it to you by law, so it's not difficult to find. So he said, watch the ratings, right? Look at what the ratings are saying. Number two, find out what business they are doing. So if a company is down to borrow money from you, and that company is into a product that you think will be affected by regulation, you want to be very, very careful about that, right? So what the business they are doing. Also, the minimums for CPs I've seen are 10 million, 5 million. So again,
5 million,
it's
yeah.
doable more than the bonds, and you can group together. Like I always say, the power of many. You can group together and get a CP. They pay you higher than the federal and the private than the federal. So maybe group together if you want to do that CP minimum. And of course, you have said the key word, the diversification. Even though they're paying you a higher rate, you want to make sure that you are fully diversified. So I see folks asking to speak. What I want to do is just to ask Idechi all the asset classes. Then we just have about 13 minutes for him to talk. We only have an hour with him, so I want to make sure we get as much as him from possible. But I see you, Collins. We'll get you in to speak once I'm through with Mr. Ayo. So, Mr. Ayo, we're going to talk now about, I believe, should we go to dollar? We've done bonds, we've done CPs, we've done short term. Should we talk about now dollar investments in Nigeria?
Yes. I think
Okay.
it's really important that out of your portfolio, and when we talk about portfolio, is just having different asset classes, different form of investments in your portfolio. So having dollars, yeah, is a dollar investment is also very important. And the form of dollar investments that are available, you have the dollar savings, which is also available on Optimus by AfriInvest. You also have the dollar mutual funds that you can also get with any asset manager. You can also invest in euro bonds,
Mm,
which their minimum varies for the savings. It ranges depending on the platform. Some $1, some $10, $20.
mm,
Also, it's also important that you also look at the for the minimum for euro bonds standard size. It's around $200,000, but their investment outfit that's even from $20,000, you're able to. It's like a fixed deposit. You'll be
mm,
able to also get interest rate. And the main reason why you should consider the dollar investment. So we're only focused on dollar fixed income investment now. So not talking about US stocks and other ETFs. So it's good to diversify. And we feel that even if there will be an appreciation this year based on different methodologies, projections that have been done, but because we know that we have not solved our dollar issues, the demand for dollar is still there. So we'll still continue to import, and we are not exporting enough. So
mm,
over time, even if things looks like it's going to be stable. If we add our dollar earnings, if the oil theft does not reduce significantly to increase the dollar earnings to the CBN,
Mm.
then there will also be further adjustments. And if there's no drastic policy even from the CBN to try to close the gap, is also something that would now extend as we progress. So having dollar portfolio or dollar investment in your portfolio rather,
Yeah.
it's also very important that you use to diversify. And for those that may be new to investment in dollars, there are two forms of gains that you make when you invest in dollars. There's the capital appreciation. So when you invest, let's say it's at 750 naira to a dollar now, and when it gets to 800,
Mm.
you have that 50 naira gain. There's also the interest on the investment.
Ayo, I think I was having a technical. Ayo, can you hear me? We just seem to have lost you a bit. So Ayo was talking about the dollar investment, and what I heard from him say there's a dollar savings, there's a dollar mutual funds, also the euro bonds. And I think he was explaining before he got cut off that if you do invest in the dollar investments, you do get the capital appreciation, i.e., the difference between what you bought the dollar investment at and what it is currently. You buy at maybe $10, maybe you buy at 1,000 naira for that dollar paper, and the dollar appreciates, and your paper then appreciates. So that's a capital appreciation on the naira paper that you have bought, right? And he also was saying that there's also a dividend, i.e., you get your dividends from the dollar investment. So when you buy a dollar fund, you can get the appreciation in terms of the fixed returns, and you also get the dividends. He's dropped off a bit. Let's see if we can take questions before you come back. Even if he's not here, I'll make sure I get him to answer. Collins, thanks for waiting so with us. What's the question, sir? Go ahead.
Okay, thank you very much, Mr. Kalu. So, I happen to be, I don't know if he's back.
Once he comes back, he's back here listening. I'm going to invite him to speak. Yeah.
Okay, so I happen to be investing using Afri Invest, and this is actually a challenge I discovered. Now, I in in dollars, and I
Mhm.
converted from dollar as of last year October. So I converted from dollar to naira to invest in the FGN savings fund. That's the
Mm.
offering for October, and it
Mm.
was about 13% plus, and also the next one
Mm.
was a double digits. Now this is the challenge I'm having: converting from dollar at a higher figure, then to
Mm.
move to the
Naira.
naira. Then from the naira I start having the issues of inflation and the money losing value, and it's going to the long run of, let's say, 3 years time, and we don't know how the political posture may be at the long run. Now
Yeah.
there's a possibility that my capital is not going to be worth it if I also want to return this money to the place. Let's say I'm based abroad, and I also want to use the
Yeah.
returns of my profits to invest where I am bringing this money out from. So I want him to actually give advice based on people that are actually in diaspora that are earning in foreign currency that want to invest into
Yeah.
Nigerian um, systems. Thank you very much.
Gotcha. I'm going
Okay.
to make sure I bring it. Ayo,
Yeah.
so where we lost you, Ayo, was when you were talking about when you invest in dollar papers, you said the capital acquisition and also the dividends earned. That's where we lost you.
Oh,
So if you
okay.
want to continue, and I can give you, Collins has a question. If you continue from when you talked about the dividends, you said you will also get the dividends from the dollar investments. Then once you're done, we'll take Collins' question.
Okay, thanks. And apologies for that network glitch. Yeah, so I was trying to wrap up that there's a difference between investment in dollars and forex trading. Forex trading is high risk, and it's good to understand the risks that you're going into. You can sometimes lose your shirt if you don't understand that market. But we are talking about investment in dollars, dollar denominated assets. And now to Collins' this question. Yes, so for those that are Nigerians in diaspora, I feel it's safer to invest in dollars. When you look at what you earn, the interest rate over there is almost at sub 1 2%. So when you're coming to Nigeria, you are able to get dollar investment that may give you 3, 4, 5, even as high as 10%, depending on the volume, like I mentioned earlier, and the maturity. So that's where you take the
Mm.
advantage of, because if you are converting, you will see that a lot of investors that have come in, whether through PE, private equity, venture capital, sometimes at the end of the day, because of the adjustment that we continue to see in our naira, even if the margin or the profit margin is 30% and there's a devaluation of 30%, it means they've not made money, because the rate at which the investment, the money they've brought in to invest is depreciating, is faster than the rate at which the company is performing. So it's important that for you that you are in Nigeria and in diaspora and you are earning in dollars, I think it's safer for you to invest in dollars. Don't convert to naira and invest. Look
Mm.
for high
Mm.
yield investments. Maybe you can have savings platform that even if you can't invest $1,000, $2,000 at once now, you have those platforms that allow you to start gathering the funds at $100, $10, $100, and you can begin to have that negotiating power when you have $1,000, $2,000, or you go into mutual fund. But it's also good to note that, because I always get that question, mutual funds will only give you indicative return. It is not guaranteed based on the Security and Exchange rule. It is based on the performance of it. So it may perform this year and not perform next year. It is not guaranteed in terms of the return you get on the mutual fund. But if it's like a savings fixed income investment, because they are experts, they put the money all together. For instance, if you look at yield on euro bonds is around 14%, but you cannot take even your $50,000. If you invest in euro bond, you may not be able to exit as when due. But these platforms, when they bring the dollar funds together, they're able to invest, and because the need for people to take their money will also not come at the same time. So they're able to give higher return, and you're also able to enjoy higher return on your investment. So I would say, please don't convert from dollars to naira. Look for high yielding dollar investments.
Okay, let me also add this, Ayo, just to follow to Colin's point. I know the market, the way it's supposed to work is that Collins is supposed to go and buy a dollar forward instrument. So if he's bringing in his dollars, he can go to the, what's it called, the FMDQ, and buy dollars for 3 years, because he was investing in a 3 year Naira fund. He can buy dollars for 3 years, so that when he gets his Naira in 3 years, he already has a locked in dollar exchange rate. So just let's ignore maybe his minimum. Does that FX market still work as of today, the forward market that FMDQ has? Because I see their rates.
Yes, I think, yes, it still works, but the volume, and sometimes there are a lot of complexity that comes with it. There's the angle that the CBN also needs to honor such contracts. So sometimes even when it's due, you may also not be supplied. You are not supplied dollars. It's non-deliverable forward. So you are also supplied naira based on the current market rate. So it's now a different case that it's different challenge you have to face in getting the dollars. So I've done 3 year forward for $1 million at maybe 360 or 400. Now at the CBN rate is at 460, 445 if I'm correct, and they have been given naira based on the difference. Now, CBN can you supply me dollars? You may not get at that time. You may have to wait for 6 months. So it's not meeting that intended objective, because CBN is also trying to ration dollars as much as it can, given the low inflow of FX to the reserves.
Okay, good, great point. So, Collins, I think the answer is that number one, I don't convert. Like I was asked the same question yesterday. If you have dollars, for me, I would invest in dollars. I wouldn't once you convert, you have an exchange risk.
Yes.
So to eliminate the exchange risk, just stay in that currency, because the dollar is quote unquote of a higher value. If it was say euros, dollars, yen, you can say, okay, I'm going to play around those currencies that are convertible. But for naira to dollars, if you earn in dollars, I'm not saying take your naira and buy dollars. If you already earn in dollars, I would prefer you stay in dollars. Just like I said, stay indoors and then invest from there. So I hope I answered that question for you. The other part of the market, I'm not really sure. Yep, go ahead, sir. Yep, you have a comeback.
Yeah. Thank you very much for that.
Okay, excellent. Wale, let's just take Wale's question real quick before we go into equities. Wale, go ahead, sir.
Thank you, Kalu. My question is around about the same thing as Collins, even though you guys are
Mm.
saying in dollars, but technically I cannot, as a retail investor, take my dollars and put in Optimus account as an example. It has to be Naira. So
Yeah.
how do I work around that? I don't think there
I
is a
think
way.
I
Okay.
was answered that. I go.
Okay, thanks. Yeah, so for the platform also enables, I think even before the end of this month, enables you to pay your dollar directly. The challenge is the cost of moving dollars in Nigeria. And it's good to note it is inflow dollars you use for investment, which some will say virtual dollars, not the Aboki dollars, the cash
What does
dollars.
that mean?
You don't use
Does
cash
that mean?
dollars. Hello, can you hear me?
What? Yeah. What does that mean?
So
Does that mean that I have dollar in my dorm?
if depending on the source of the dollars in your DOM, for instance. So if you've gone to Aboki and you bought $1,000 cash and you've gone to the bank to pay it in, that can't be used for investment because you won't be able to move it, transfer. So some will call it transfer dollars. Is the one that you've paid someone Naira, they transfer the money from their dollar account to your DOM account. It's called transfer
Okay.
dollars. It's called inflow dollars. Sometimes it comes at a premium. Some call it clean dollars. That's what is used for investment. So to answer like Wale, on the Optimus platform, yes, for very soon, you'll be able to pay in your dollars from one bank to the other, but it comes with charges compared to the one from Naira. But what like it's good to have some people that are already using it because it's just 3 months old on this platform. Is that you instead of you going to look for inflow dollars, we bring the money together. We've signed agreement with BDCs that supplies the dollar. So it's the market rate. We are not an exchange, but we just help you facilitate to get instead of you calling, and some people can fall victim when they don't know the person. So what I would say is you can transfer your dollars on some platforms that you can check if they have it, you can transfer. And on Optimus, before end of this month, you'll be able to transfer your dollars, but it will come at a cost when you're also taking it out. Because when you look at the charges, transaction charges in Nigeria for dollars is also very high. So those are the
Okay.
downsides.
Wale, did you have a comeback on that?
No. I think that kind of answers my question. My original question, though, was around the relationship between Optimus and AfriInvest, the asset managers, right?
Okay.
So you said it's Optimus by AfriInvest, but can you just give like
Okay.
an idea what the relationship is between the both companies? Thank you.
Okay, thanks. And Optimus is the financial tech for AfriInvest. So we discovered that we've been in business for over 28 years, and we a lot of people are coming up with financial technology without investment knowledge. So, Fair, why don't we put the investment knowledge with our AUM at combined at almost 50 billion over these years? Why don't we democratize, make it available to everyone? So it's fully owned by AfriInvest, and all the funds that we put together goes to our asset management company that is over 20 years and is regulated by the Securities and Exchange Commission. So the platform is just to mobilize funds, and if it's moved to AfriInvest. So we can say it's also guaranteed with the name of AfriInvest, and that's why we're using that name to push it. It's fully owned by AfriInvest. Yeah.
Okay, excellent. Thank you so much, Ayo. Ayo, so before let's move now. We've done short term, we've done long term fixed income, we've also done commercial papers. Let's talk about equities. Let's do equities, and if we have time, we can do commodities. But let's do equities. My question for equities is this: if I am an investor, let's start first of all. Can I do short term equities, or it just has to be long term? Let's start with that first premise.
Okay, thanks. I think the first thing we need to note is that equity investment is long term. It's safer to have that perspective because it fluctuates. It has more. It has there's what we call volatility, ups and down. So if you have the mindset that it's long term, So you will see period where you will see significant appreciation and you can exit and come back to buy it when it's low. So for investment in equities, it's good to also understand the business that they do and be familiar with their results and see that these companies for Nigeria, how you easily know is companies that pay consistent dividend. But in developed climes, people buy the prospects. So a company may be declaring a loss, but they expect that loss will reduce. Even if they are not paying dividend based on capital appreciation, you could buy. So long term is good. Like Warren Buffett would say, don't go into anything that you, when the market is down, you can't hold for 10 years. So which is long term.
Mm,
So always have that
mm,
at the back of your mind. And one way to invest in the equities market is you invest in bits, in tranches. So you can set a
mm,
record that every month I want to be putting 1,000, 2,000 naira every month on the platform. So like on our platform, Afri Investor platform, which will be collapsed
mm,
into Optimus later, you don't need any amount to open your account. You can buy 5 naira worth of stock, but just set a target for yourself that you are buying, if it's every week, if it's every month, good stocks that you
mm,
see their result. Monitor, it's your investment. So it's good when result comes out, just go to the NGX, Nigeria Exchange, look at their result,
mm,
or if you join, let's say your mailing list, like for instance for Halfree Invest and the rest, you get updates when results are released and publication. So you see that this company still has prospect. When you see that the profitability is not in line with the expectation, just exit, because you would see its market react based on performance. And you can look at other stocks that have that long-term prospect. So once you're able to do that, it will help you to normalize your investment. We call it um, averaging down. There's the word that I forgot. You buy in bits, so over time
Like
you
dollar
buy.
cost averaging.
Correct. Thanks
yeah,
so much. Dollar cost averaging. So you buy in bits. It helps you to normalize it. If you look at this, is not a recommendation. Zenith Bank in December traded as low as 19-20%. So at that
yeah,
level, I was buying gradually, which is for long term. It's not to just speculate. Buying for my kids, buying for, so it's long term. And now it's about 25 naira. Stop
yeah,
buying. Yes, it may get to 30 naira, but the market is a cycle. We may still see it come back anytime to 22 or something. And you buy more when it's low. And when you feel it's high, you can still maintain what you are buying, but don't be aggressive when you feel that it's gained significantly. Those that are keyed into MTN, they are also the IPO at
my,
169. It's currently at 235. It went to 270 last year. So, and you see that their results, they've crossed the 2 trillion revenue mark. So these are companies
mm,
that I don't need to explain how they make money. If you check their result, you will understand. So it will help you. Based on dividend yield. Dividend yield is the dividend divided by the price. As long as
mm.
let's say you can set a target of between 8 and some can be as high as 12, 13% for yourself, which is also higher than what you get from treasury bills.
Wow. Yeah. And I also, so great point on that of let's setting the framework for equities, right? Dollar cost averaging, thinking long term, buying the business, not the stock itself. I'm looking at the entire Nigerian market, looking at the dividend yield. The highest priced stock that has the dividend yield is about Zenith, 12.3%. Then GT, then UBA at 11 and 11 as well. So dividend yields for Nigerian stocks are not beating inflation. Should we still take that? Like you've said, just want to make that point. Should we ignore the yield and go more with the companies are looking at long-term earnings and yield? What should we focus more on, the yield or the long-term growth prospect? What do you focus on more?
Yeah, so for equity, it's based on, it's a combination of both. So the yield would help you that the minimum, but and you at least you should have a minimum threshold while you now look at the prospect to grow, because the prospect will also still translate into the dividend yield that you'll be getting, because if they are not profitable they won't be able to pay dividend. So while I'm
Okay.
expecting them to grow, I would also want to ensure that We use dividend yield like worst case scenario. Even if I buy Zenith at 20 and it goes to 15, but I know that they will still pay me 3 naira at my own cost of 20, which is almost 15%. I'm still good. So I'm not
Mhm.
bothered that it's come to 15, because over time, based on that prospect which you mentioned, it can come back to 30 naira in the long term. So and that's the advantage of just staying long, because if you put short-term money in the equities market, you may be really very worried. When you need the money, market may be down, and not necessarily that it doesn't have the prospect to go up. And once you sell, you know you have crystallized your loss, and it's always very difficult and painful.
I got you. Good point. Good point there. Let's take questions, Ayo, because we have about 15 minutes left with you. Let's go to Bang. That was them. The bio underscore Richie. Go ahead, sir.
Okay, good evening. Thank you very much, Mr. Ayo. So I just have a question about the stocks market. I was thinking, is there a way that is there a possibility we can have something similar to the S&P 500 in Nigeria that can guarantee 10% or more yield annually?
Okay, I like that. Very interesting question. And you would see even the S&P does not guarantee the 10%. I'm also invested in Vanguard 500, and it's not, last year wasn't a pretty year, and this year, yes, you may be appreciating. So what we have in Nigeria with you have some firms that have come up with different indexes. So you have, like, even for AfriInvest, we have the AfriInvest Banking Index, we have the AfriInvest High Dividend Yield Index. These are stocks that over time they would have looked at of 3 out of 5 years. So you have different indices, and this indices or the index is just looking at the right framework. So looking at the stocks, looking at their performance over time. You, even if you don't want to go with like a firm, you also have the one you call the NSE 30, which captures the most capitalized and most liquid stock on the Nigerian Stock Exchange. But it's good to now look at what has been their performance in the last 10 years, what has been their performance in the last 15 years. So, the dynamics is a bit different in Nigeria because there are several factors that really impact. And now, when you look at the activity, domestic investors account for the major part of activity in the last have accounted for that in the last 2 years, which, yeah, we may say created a bit of stability, but it's not been able to allow most of those prices to appreciate despite the performances of of those companies. So I would say that by and large, it's, yes, there are indices, but not as much as 500. You see them maybe 30, 10 stocks. And over time, we also use it to benchmark ourselves. So when we recommend based on that portfolio, when we are discussing at the end of the year, we tell you what the performance is. Does it meet? Does it surpass our expectations? So that we are also accountable.
Excellent, excellent. Thank you so much. So let's get. I've got. I think he just dropped off. I was going to call him up to speak. So, Ayo, I think just trying to get the questions in before we let you go. I know we have a hard uh, cut off at 11. So let's get. Bayo, lady, were you okay with that answer?
Yes, I was okay, but I have another question. If
Real quick.
okay, if I was looking at the dividend yield ratio or payout ratio of some stocks, and I was some were 0%, some were 20%, some were 50, some were as high as 90%, some were even more.
Or dividend yield?
Payout ratio.
Oh, got you. Yeah.
Okay, so and I'm wondering that, like, which is the safest to go with? Should we be looking at the attractive payout ratio, or should we be look? Is there a safe? Is it that we should not go beyond a stock that pays 50%, or we should stay below 50, or we should look at the higher paying stocks, or
Yeah, I was
Sorry.
going to answer, but yeah, Ayo, what's your take?
Yeah, so if I understand your question well, that let me just before so that I can answer correctly, saying that should we look out for those that pay high yield rather than low yield, or can you rephrase?
No, he's talking of the dividend payout ratio,
Okay.
i.e., they make 100
Okay.
dividend pay out that 90% of that 100
So
in terms of
o-
the revenue.
okay,
Net
so I
So
get
income,
not
that.
the
yes.
Very simple. What concerns you? The yield is the return on the investment. So if your
true.
90% gives me 4%, it does not really benefit me. And if some people can have 50% payout ratio and the yield is 13, 14%. So for you as an investor, you're an investor, you don't be attached to just the name or emotionally attached to just the name. It is what do you get from the investment? You are investing or you are associating yourself with this company because of the potential return. Because we always also get that emotional attachment. So even if the interest rate is 4%, you say, "Oh, I love this company," and there are companies that are
Mm.
also very good and can give you 10%. So focus on the return, the yield. Let's forget the terminology. Is the return based on dividend that you are paid, based on what you have invested. Payout
Mm.
ratio is based on from their profitability. So if it's not giving you good yield, it can be a mix, but you don't want to invest much in something that is not giving you good return based on dividend.
Very clear, because the yield is how you compare across boards. If you're comparing yield, you're comparing real estate to equity to dividends. That's the yield. The payout itself is just an internal metric. It really does, yeah, it really does meaningless. Let's go to Samuel. Samuel, real quick. We have about say 5 or 6 minutes more. Samuel, real quick. Thank you, Vanilla.
Okay, thank you. Good evening. Just a quick question. Good evening, Carlo. Good evening, Ayo. So, it's please, can you just speak more to the dollar investment at Optimus as relating to the minimum amount, interest rates, and tenor?
Okay, quick one.
Thank you.
Thank you so much, Samuel.
Okay.
Yeah.
So the dollar investment is also like you're saving in dollars. So we have what we call OptiFlex and OptiLock. So flex is that you can take your dollar anytime, maybe convert it back to naira, and very soon you'll be able to take it in dollars and pay for the charges based on bank charges, not us trying to make money from that. So the rate is as low, you begin to earn as low as from your wallet at 4%. And when you invest in the OptiFlex, that's high yield dollar savings investment, is as high as 5-6%. And when you are locking it for a period, you can get as high as 9%. So you see this, for those that are enjoying this kind of rates are also those that invest $200,000 in euro bonds. But it's just simple. I always say, once you don't understand, you need to ask us, how do we make money? What we do is we pull all these funds together and we can easily buy euro bonds at 14% or at 13% and give you, and because we are creating liquidity for you, because we will not invest all the funds, we have to set something aside. I'm trying to just explain the business model so you get some comfort. Any business that cannot tell you how they make money or how it's, then it means it's a scam. So that's just the basic way you invest it. If you are bringing in dollars, as we make that available later, you bring in your dollars and you collect it to your DOM account. But everything has to be in your name, and because it's fully regulated. Yeah.
Okay, excellent. Thank you so much, Paul. Let's get Professor A.Y. Akin Ajim. Professor A.Y., go ahead, sir.
Yeah, thank you, Kalu, and thank you, Ayodeji. Okay, I joined this space not quite long, like 20 minutes ago, and I'm sure some of my questions might have been addressed before. But let me just ask. I actually want to ask, what do you advise, knowing fully well that this is an election period, and if I want, or if anybody wants to go into buy, I mean, buying to stock now, what do you advise? Do you advise us to wait for the election, or after the election to go in, or we can actually, go into the market now? That's number one. Number two, um,
Very
I know there is
quickly.
okay. Number two, I know there is a particular rule that I think I've heard on this particular space before, that is actually advisable to go into the for equity to go into the market around maybe um, third quarter or fourth quarter, which is around October, November, but that the price of the share, price of the stock actually go down during those period, and after I mean by March or April, it will start appreciating. So what do you say to that? Then lastly, for the company that's actually doing their AGM, okay, for example, Zenith and GTB,
So let's
I
take
know.
Prof. Can you answer the two? We have, but let's take the two, so if you don't mind. Ayo, he asked
Okay.
Okay, so
about
thanks. So for so the first thing that I would like to let you know is when we look at when you look at the technical, which is looking at historical, sometimes it does not follow, because what you are saying is maybe typically maybe in December you see that market is up, or there's a period where market is down. There are other factors that may influence it. So what you would just also look out for is most times people buy ahead of full year results when dividend will be paid. And that was what happened in December. People are buying. And when you also look at the trend, done the analysis for like almost 10 years, maybe 4, 5 out of those years, you would see that second quarter market will come down, because the people would have factored in that dividend expectation, and the market would decline based on the expectation in the market. So what I would say is that have that long-term perspective. If you have not come into the market now, don't be aggressive coming in now after Zenith has moved from 1920 to almost 25, 26. Don't be very aggressive. You can still buy if you are the type that you are buying for long term, you are buying gradually. But don't buy and based on market news that it would soon get to 30 naira. That's like
you already late, yeah.
joining bad wagon. So, I'm just using Zenith for example. So there are other stocks that have really moved too. So just you can accumulate, we'll say accumulate, but don't be very aggressive that you're buying now. Yeah, you talk about election, and that it creates a lot of stability, but we all know in Nigeria, election will come and go. So in case if there are periods, we look at the last election, was it that's in 2015, when there was a bit of issue during the vote counting, we saw how the market dip. Those are opportunities. So if we don't pray for any unforeseen circumstances, but we know that after all is said and done, Nigeria will just continue our business normally. We're hoping for the best, but it's when market is seriously down, that is when you should be averaging down, dollar cost averaging, and not when it's up that you are aggressive.
Okay.
Thanks.
Average, yeah. So I mean that's great advice. We're going to take last two questions. We have about 2 minutes with you. So guys, Dr. Kunle and Chi, we're just going to have one question each. Just go straight to the point, Dr. Kunle, and then after you're going to have Chidebere. Just very quickly, sir. We'll have 2 minutes more. Go ahead.
All right, thanks very much. Can you hear me?
Yes.
Can you?
Okay, no, just a comment. Obviously, if you're already living overseas, sort of makes sense because of foreign exchange rates. Sort of keep most of your investments in dollars or euros or whatever it is, and keep a footprint in Nigeria relatively small. That has been my style. The way I've tried to invest in Nigeria has been through the NGE ETF.
Mm-hmm.
It's been awful. So I sort of liquidated most of that. But
Oh,
if you also
really?
live if you also live overseas, more interest rates are up, and you can get up to 4%, depending on the tenure of 4.2 for a 12-month or 15-month deposit. Just wanted to throw that out there. Thank you.
Yeah, I also did that NGX, and I still stay there. And again, you're right. CDs in America are now 2-3% in dollar terms. Big opportunity there. Are you have any comment on that?
Yes, so I think it's you can mix it up if you have access to Nigeria. So I would say that there are fixed dollar investments that will still give you 9-10% to depending on the volume. So you compare, but safety is also very key. Ensure that you also research on companies that you're putting your money, the investment management that you're putting your money. Ensure they are registered with the Securities and Exchange Commission. But beyond that, who are those also running it is also very critical that you confirm and be sure before you put in your hard-earned dollars.
Okay, got you. Let's get Chidebere. That's Chidebere CK. Our last guy. Go ahead, sir. Chidebere going once, Chidebere going twice. Ayo, thank you so much. You promised us an hour. I'm so grateful you've been here to share these nuggets, right? So I love them. If you have this, we're going to do the recording and do share so that we can get lots of folks just appreciating and learning from what you've dropped for us today. We try to do this every weekend, talk about money, finance, and the economy. And Ayo has been a great host. Thank you so much, sir. Do you have any closing words?
Okay, thanks. And I would say that there will continue to be opportunities amidst crisis. So we're not carried away with the different crises, the challenges. Let's be focused on what are the opportunities for business owners on this call. What sector present opportunities despite low growth? So that should be our focus. And I'll share lastly for those that are wondering about what Optimus by AfroInvest. I just shared the link to sign up link if you're interested. I tagged Mr. Kalu,
Yeah,
and I'm
I'll
sure he
do it.
would. Yeah, so is you can look at it, research, like I would say, no sentiment, research on the whichever firm that you're trying to invest in, research on AfroInvest, and be sure before you put in your money. Yeah.
Thank you so much, Ayo. I mean, we're going to bring you back, obviously, to talk about maybe the second quarter or third quarter, but we're definitely going to bring you back to just get more of your insights. All right, folks,
Okay.
that's
Thank you.
thank you so much, Ayo. Thank you so much for joining. Normally, we try to do this about 2 hours, and as you can see, we will never ever have enough time when we're talking investments. So, for all those who have requested to speak, I do apologize. Ayo has another engagement, so I have let him go a bit early. I apologize for that. So, we'll be here next week on Phil Need to with another guest, same topic: money, finance, and the economy. And I do hope you guys will join. My name is Kalu Aja. Thank you all for being a great team with us today. You guys have a great week.